So I'm here today with Joe Deegan at the Real Estate Expert Summit. Coming up, he'll be speaking this coming weekend at our summit conference online at no charge. It's and you can register for free at realestateexpertsummit.com, realestateexpertsummit.com. Joe is from upstate New York, a longtime friend of mine, very knowledgeable real estate, both commercial broker, investment broker, and investor. And he's going to be coming to share with us about what he sees. So, Joe, I'm going to go off and let you talk, and I'll be right back.
Great, thanks, Chuck. It's a privilege and an honor to be here. As Chuck mentioned, I'm in upstate New York, specifically in the Hudson Valley region of New York State, about 90 miles north of New York City, in a little city called Kingston, New York, which ironically was the first capital of New York State. I specialize in primarily brokerage, sales and leasing. I've done a bunch of development in my career. I manage about 250,000 square feet of real estate, about 50 tenants and 30 some odd buildings, and do some consulting as well. So I'd like to think I kind of cover all the bases of the commercial real estate atmosphere.
Okay, awesome. So Joe and I are going to talk about the current market. We're going to talk about where he sees that we're going, particularly from his unique vantage point. He's out of the mid, what they call the Hudson Valley of New York, which is how far north of New York City is that?
90 miles.
90 miles north of New York City. So he's not in New York City, but there's influence from there of what's happening, both positive and negative, right? So we're gonna
just about all positive influences right now
for you guys, right?
Yeah,
particularly.
Yeah.
So let's just start there. Where do you see that the market is and knowing that there's a whole bunch of what we could call the market, where do you see that the market is going in this next year or two? Where's it? What's happening now? And where's it going, you think?
Well, let me state the obvious that I say all the time and mean sincerely. It hasn't been lost on me that 50,000 people to my south have perished. So I don't mean to be joyful or gleeful in any way.
Yeah.
The facts of the matter are, though, that this will be a long-term tremendous benefit to the Hudson Valley, to Connecticut, to northern New Jersey, to even sections of Pennsylvania. Mm-hmm. So look, Chuck, I wrote the year off in March. I wrote it off. I looked at my projections. I run a pipeline report all the time. What business am I doing? Where am I going? What's going on with sales and leasing, and what's going to close? When is it going to close? And I literally wrote it off in March. I said, it's game over. Figured I could make it through the year. I'm a very small firm, as you know, and sort of went into triage mode and how are we going to get there? By April, I was reconsidering that stance. What I didn't put in my calculus in March, I was referring obviously to coronavirus, was the mass exodus out of New York City. And that has proved to be a likely boon to the Hudson Valley. Right now, the residential market has taken off. I don't do any residential work, but I clearly follow it. Residential market, Ulster County in particular, the county I live in, we were up 17.2% this quarter over last quarter in home values. I'm got my tentacles out, as any good broker does in a local market. I follow a lot of, shall we say, unpublished statistics or published. The school district enrollments are up substantially. People have already relocated here. And when you relocate here as a family and you start to put your children in school, probably going to plant some roots for a while. You're probably not going to pick up and go in the next year. of all the statistics that the Chuck Sutherlands and Joe Deegans look at, real capital analytics and unemployment and interest rates and all that, I have a new statistic I look at. The new statistic is call your local moving and storage company, whom I know very well. You want to take a guess at how many moves our biggest local moving and storage company moved from the 5 boroughs to the Hudson Valley in a 60-day period? Take a guess, Mr. Sutherland.
Oh,
Come on.
let's say 3,000.
All right. That's a little crazy, but I asked you to guess. 56, almost one a day. That's huge. That's a tidal wave for my market. That is a tidal wave for my market. I've heard, we all read all these crazy reports. We try to decipher them, see what's real, what's not. There's 8 million people in New York City. Some expert somewhere said 400,000 are moving and never going back.
Yeah.
I just want 2%.
Yeah.
Just give me 2% of that number, and that's a tidal wave for me.
Well, and it's only beginning, maybe.
Right. So has the commercial market moved in value? No. The residential market has. Joe Deegan's crystal ball says, 12, 18, 24 months, commercial follows. These people are going to need services. They're going to need things. They're going to get tired of working out of their homes. Mm-hmm. They're going to supplant themselves into some smaller office spaces. That's going to cycle back, but that's going to take a while. So that's, one of the good news scenarios. One of the bad news scenarios is I have a 5,300 square foot national tenant that shall remain nameless, that has notified us the end of their lease term in 18 months. They'll be scaling back to 800 or 1,000 feet. People are going to work out of their homes, and they just need a conference room and a place to meet, and everybody's going to work out of their home. They're going to reduce their real estate costs by, 80%. Got another phone call. Equity bond firm in our market, 39 employees, 12,000 square foot office building. Very interesting. COO calls me. I've been working out of our homes since March. And there's this thing called Zoom. And we've all figured out we don't need to work in an office anymore. So can you sell our building?
Yeah, the whole thing that we never expected would happen. In fact, we would have bet that it wasn't going to happen before this, that people were going to learn how to use technology and do virtual conferences online and work from home. You could have bet against that and made a lot of money in a normal market, in normal times.
Well, I think my architect put it to me the best. He was on some AIA architectural Zoom conference or something, and the predominant theme amongst the people on the call was, look, we always sort of knew we needed to have 30% of our workforce work from home, and we could scale back. But 99% of the time, 99% of the people resist change. Mm-hmm. So we never had to conquer that. Well, now we have. Now, like everything in life, that pendulum will swing back. It won't surprise me if 18 months from now, the 5,300 square foot tenant says, we were just kidding. We want to stay the route. We're good. People don't want to work from home. They don't like being interrupted by the barking dog and their children and whatever. So, that will ferret itself out. But yet another third leg of this same theme, medical tenant, been in business 22 years, same location. Landlord calls me, says they're leaving. I'm like shocked. I call the head doc up because I needed to get the keys to go list the place and show it. So what are you doing? Telemed. It's all going to be over the phone. So, to say that this hasn't, upended our lives at every angle would be an understatement. But there's good and bad news in everything.
Right. And I know people who are telling me they love working from home.
Yep.
And I have people that are telling me they hate working from home. So it's we still don't have, I don't think we have a feel for this just yet. And from what you're saying, the same thing. Things are going to work their way out, but right now the tendency is towards downsizing, right? Staying with the office buildings for a minute, what is what are you seeing in terms of square feet per employee? Does it look like the number of people that are going to be in offices in your area is going to decline in terms of the number of square feet per employee, or I mean, increase the square footage per employee?
You know, that's a great question. Well, I frankly haven't gotten that far yet.
Mm-hmm.
But, you know, if I was a betting man, I would say, okay, 5,000 feet, 23 people used to work there. Now we're only going to allow 11 or something. But I've yet to have a formal conversation along those lines.
Okay. It'll be interesting to see how that plays out in terms of office space and office rentals, et cetera, over the next 18, 24 months.
Yeah.
Well, switch gears to another market, a part of the market, which is apartments. What is happening with apartments that you can see, if you can see anything, and what do you foresee is going to happen in your area over the next 18, 24 months?
Look, multifamily has been the favorite child of investment real estate for years now. It will continue to be. I see nothing but stability and growth there. That said, New York State, in its infinite wisdom, be you on whatever side of the issue you are, passed a tenant protection law. You can only increase rent so much, and it's just going to have a downward effect on real estate values and the like. That said, I think self-storage is the most stable asset class, followed by multifamily. So that's going to continue. Look, Chuck, you and I zigzagged across the United States for years and bumped into each other. And the other thing driving the multifamily market is this thing called interest rates. And, for like 8-9 years now, I've been saying to my clients, look, they're never going to get lower. You got to go now. And for 8 or 9 years, I've been wrong. So, when you go out and get Freddie and Fannie money for multifamily, in the 3s fixed for 20 years, probably going to do that.
Makes the numbers on apartments look a lot better.
Yeah.
The cash on cash return to the investor.
It's pretty amazing.
Yeah.
It's not going to change I see.
It's not going to change. How about occupancies? Does it look like they're going to stay stable, go up? You may not have a feel for it yet, but what do you see? I
see total stability in that market, in this part of the world. I don't see any changes, bigger up or down.
All right. Well, having said all that, then what do you see the opportunities are in the market? What do you see the opportunities are, to really make wise investments, whether that be as, some people look to buy wholesale, some people look just to have their money working for them. So what do you see where the opportunities are now and coming up? Any thoughts about that?
Yep. Believe it or not, this is kind of a real local yokel beginner type play. Mm-hmm. But buying and flipping houses is a bad business to be in right now. I'm watching people do that very successfully in my market. Mm-hmm. Very successfully. And I think that trend is going to continue to a large degree. A lot hasn't changed other than that. I still think the value add is your best play here.
In single family?
No. Single family by value add in some sort of commercial structure. Can you buy something at of replacement cost? Throw some money at it, take 2, 3, 4 years to tenant it up and create a, does 1 + 1 = 3 type thing at the end of the rainbow. And I think it does in our market. I think it does. So I think that's where some opportunities are. Look, there has been and continues to be for literally 30 years in this part of the world, a 2% vacancy rate in apartments.
Mhm.
So, I mean, if you wanted to do ground up construction, that day may be here as well.
Right.
We haven't seen new product come out of the ground in forever, and that day's coming.
And the materials costs are a little more reasonable than they were a few years ago.
Yeah.
And the labor is available now that might not have been available a couple years ago. So,
Yeah.
so this may be the time to build. I mean, when we were building self-storage, we always loved to build in recession.
Yeah.
Because then we could, get the materials at decent prices, and we could get people to work on our projects, and people it seemed like people always need self-storage. So that was one sector.
Yep.
You're talking about those of stable sector. So this may be the time to build that. So what do you see is going to happen we talked about interest rates a second ago. What do you foresee is going to happen on interest rates? Or what are you hearing people talk about, like what they believe is going to happen on interest rates?
I really do. I wish I was such a heady macroeconomist that I really understood the impact of $3 trillion entering our economy. I don't. I can't tangibly explain that to you.
Mm-hmm.
I can tell you it's a lot of money. My point is that amount of money flowing into this economy, chasing product, and you can get into the whole China-U.S. trade deficit and all sorts of other things, our national debt. I mean, if the interest rate on our national debt went up 0.25%, it's an incalculable number for me.
Mm-hmm.
So I just don't see interest rates. I don't see them moving for a very long time. There are others who are claiming hyperinflation is around the corner. People who know far more than me are predicting that. They could be right. My mind doesn't see it. I think we have a low interest rate climate for 24 to 36 to 48 month window.
Yeah. Then you got the Federal Reserve promoting lower interest rates, and so what do you hear in terms of what their future actions are going to look like?
Well, more of the same. I by the way, I saw a really interesting interview with Jerome Powell, chairman of the Fed. I always like it when people say things in a one sentence bite that you fully understand.
Yeah.
And the person interviewing him said, well, this is an unprecedented economic crisis. And he said, stop right there. This is a health crisis that became an economic crisis.
Mm-hmm.
Very telling sentence,
mm-hmm.
very accurate sentence. He said, look, 6 months ago, there was nothing fundamentally wrong with our economy. Nothing. We've had to react to an outside force.
Mm-hmm.
That was interesting.
Yeah.
Because it's true. And they've reacted. And again, be you on the left or the right, a Repub or a Dem, makes no mind to me. This, PPP loan program and EIDL loan program, I think was a good call. I think it did what it was supposed to do. I think it will have repercussions in our future that I can't calculate. Mm-hmm. But it saved us from going off a cliff and climbing out of it over a 15 to 20-year horizon. Mm-hmm. So I think that was extremely smart. And for all of us who complain about federal government's bureaucracy and lethargy in getting things done, that program was out and enacted in weeks.
Right.
And I know it really saved a lot of people that I know.
And both the Congress and the House, the Senate, and the White House all cooperated in getting that deal done quickly.
That was amazing and refreshing because it needed to get done in the manner it did. And the EIDL loans, I mean, people who, you got a long-term fixed rate interest at 3.75 on a 30-year schedule with no prepayment penalty. That takes a sting out. Look, what, 90% of businesses in America are small businesses, whatever the definition of small business is. $150,000 loan to a lot of those businesses in that type of repayment structure is huge.
Yeah.
Which gets back to, the amount of cash floating around out there absolutely amazes me. I mean, we are working right now, and again, I'm the big player in the grand scheme of America. I run a little office with 4 people in it, and we do what we do. But we are getting all cash offers. We listed a warehouse building, 32,000 square feet, very nice, neat, clean, blah, blah, blah. We have 3 all cash offers going to highest and best. And for those in your audience who don't know what that means drop a contingency, or say you'll close in 30 days, not 60 days, or do something to increase your offer other than the all cash that it is, which is already great. We have 3 all cash offers on a property like that. I mean, that, again, going back to March, never in my dreams did I think I'd be sitting in September having this conversation with you.
Yeah. Are your buyers coming from outside your region?
In this arena, two of them from outside, one 60 miles to the south, one 75 miles to the south, so hovering the New York City border, and one local. Yeah.
So so it's not just coming from in the city, not coming from just outside the city of New York, but even in your local market, you've got people
from the southern Hudson Valley to really mid or the northern Hudson Valley where I am.
I gotcha.
Yeah. Hey, I'm bullish.
Yeah, I can get that completely. I mean, if you got all that cash, we've seen like in California. California has had so much cash with people in the state, and they buy property there and push the yields down. Have pushed the yields down over the years, and the price is up, and typically all cash. So now we're going to see that maybe in America. What do you think? What are your thoughts about that?
Yeah, I'm agreeing with you. It's funny too for those in your audience that, New York has a horrible reputation. I understand it. It's much of it is deserved. And yet, when you do peel back the onion and look, while we are a high tax environment, and we are, no tornadoes, no hurricanes, no floods, no earthquakes, clean water. I mean, and when you look, and I'm getting a little over my skis here, but when you look at your cap rates and rates of return in this quote unquote high taxation market versus California, we outperform California all day long.
Mm-hmm.
And it's, I just kind of an aside, always makes me laugh. We get this bad rap, but there's some good here. I mean, I've been here my whole life, and you can make $1 here for sure.
When California's a big high tax state as well, I don't know what the relative relationship is, but so that's a good comparison. You've got California, the yields continue to go down, the prices continue to go up, the investments are pretty solid, barring an earthquake. The values are pretty solid, and they got a lot of cash out there as well.
Well, I think it's frankly nothing more than California from a climate standpoint overall is a much nicer place to live. I'll give you that all day long.
Mm-hmm.
But look, in New York City, you'll do 3.5, 4 cap deals in apartment buildings all day long. In upstate New York, you're in the 6, 7, 8, 9 cap rate range. California, that whole state is in that 3 cap
Yeah.
range, I mean, I'll take where I am, believe it or not.
I gotcha. Now I know you primarily act as a commercial broker, but you do have some investments on your own for your own long term. What do you see that you're happy with? Whether might not present the greatest immediate opportunities, but long term would be a good investment. What do you think for yourself, for your own investing or your family's investing? What do you see the best value for you?
Chuck, that's a great question, and it's a splintered answer because I live in such a small market.
Mm-hmm.
It's not like there's 29 office buildings 10 miles from me, nor are there, 7 self-storage centers. There probably are 7 self-storage centers, but, we have no depth. So I own retail, medical, office, personally, just based on where it is, what did I think of it that day. So I'm a very diversified investor. I wish I wasn't. I wish I owned a self-storage portfolio, in the Southeast, and I was just an expert in that field. That was all I did, because I think specialization gives you a big leg up. The lenders, the underwriting, the appraisers, you know how that market works. I am forced to be a massive master generalist, which is good and bad. But every time I kind of shift, somebody calls me, I got a call today on a retail mall, not a mall, but a sizable shopping center. Do I know enough about shopping centers? Yeah. Am I an expert in them? Is that all I do? No. Can I handle it ably? Absolutely. But you know what I'm saying.
Yeah.
I think specialization would be a great thing.
Yeah. So self-storage, we don't know about medical office, that telemedicine is a wild card. Clearly a wild card. My wife was doing a dermatology appointment the other day, and she did the dermatology appointment on on a teleconference with the doctor's office.
And she was happy.
And she was happy with it. She didn't have to go out, did all I don't know what it's like up there in the Hudson Valley, but in Dallas, it's a little stressful given the current situation. So,
right.
So she was happy not to have to go out.
Well, let's look again. Your audience, I'm sure, would know that you and I attended a conference last week. It's an organization that Chuck and I both go to these meetings. The meeting was
marketing sessions, and both remote now and virtual at the same time.
Exactly. So I had the choice of spending, $500 to register. I don't know, $500 for airfare, $500 for lodging. I spend $2,000. Or I really didn't want to travel. I want more of COVID to go away. Mm-hmm. I spent $175. I signed up as a remote attendee. It's pretty good.
Yeah.
I got a lot out of it. I spent $175. There's nothing that substitutes going out after a meeting and grabbing a glass of wine with somebody and sitting down and having that conversation offline. That I missed.
Yeah.
But everything else got accomplished.
Yeah.
So.
And without a whole lot of dislocation, both in terms of time, wear and tear on your body when you travel, and money, and you were able to go kiss your wife at the end of the night.
I was, I got a questionnaire on it. I'm sure you did, and I gave everybody A+ and said it was incredibly effective. Mm-hmm. It really was. I was shocked. I think we've all been shocked what we can do in this new world.
Right.
A, we've had to, but B, we have. And the world hasn't stopped. It's not going to stop. And that to me is very intriguing.
Yeah. I remember years ago, I was sitting at a table. I'm an early adapter of technology, as you probably know. And I had a little palm top computer with a little, what's called a PCMIA card, basically a card with a little antenna sticking out. And I was sitting at a table typing away. And a man I know, an older man, comes up to me and he says, "What are you doing, Chuck? What are you doing?" And I said, "I'm getting my email." And he said, "What's email?" Right? What's email? Well, the same thing happened with online conferencing, telesummits and conferencing to do business. I mean, I had a business meeting last night with people. One person was from San Diego. One person was from Austin. I'm in Dallas. One person was in Kansas. And we're working on a real estate transaction together, and we're all over the place. We're on a Zoom call. It wouldn't have happened a year ago. Right. So we're right. The technological impact of what we're doing, we don't know yet. Just like email, nobody knew what was going to be like. I know my friend who asked me that question, "What's email?" was sure it was just some kind of passing fad. Just for his reaction, right? Now our professional jobs, it seems to be, is deleting email. So
that's the truth.
So the world is accelerating. You got telemedicine, you got the changes in office building requirements. So if you were going to bet, what are the things that's going to have the biggest impact in the real estate market? 5 things that we're doing right now or on the verge of or just started doing 5 years from now that's going to have the biggest impact on real estate values, marketing, transaction making. What would you say those things are? This is a wild guess. We're all just completely speculating here. What are those influences going to be?
Well, that's one broad, thought-provoking question. I'll give you off the top of my head. I think you're going to have spaces be whatever form they are. Retail, office, I guess I'm referring to mostly now, are going to have, even in upstate New York, where it can get really cold in the winter, they're going to have outdoor components.
Mm-hmm.
It's really interesting. I'm working with a restaurant tenant right now. I'm looking to put in 3,300 square feet. I actually think we're going to do it. We've got to build out the space. They won't be in till about a year from today. And I think they're going to go ahead with it. It's a 10-year lease. But literally, and this was pre-COVID, by the way,
mm-hmm.
But now has become integral. This is a value-add building, like I mentioned before, and we're going to pop 2 holes in the side of the building and make this super millennial, brew pub with 2 roll-up garage doors that will lead out to a deck. And I think anymore, you're outside, even in New York State, mid-March through mid-November. And people are going to put the little gas heater things out there. Mm-hmm. And look, human beings, again, another, great thing you hear along the way, like the Jerome Powell statement, and you read something that all of a sudden clicks with you. I was reading or listening to some sociologist who said, look, human beings are wired to be together. And I never really thought about that before. From the dawn of mankind, we were in groups, we were in families, we were in tribes. That's what we do. We don't, Jess isn't over there on the side of the mountain by himself. We seek to be with each other. That's not going to go away. Mm-hmm. So we're going to be with one another in a different type of format. So I think restaurants and bars and office areas and retail areas are going to have that kind of component worked in. Second to that and related, boy, talk to your HVAC contractors about air exchanges and air filtration and keeping air in a building constantly moving and bringing fresh air into space. That's going to be a significant design issue incorporated in every building today forward or 3 months forward. Talk to Steve Barker, who's doing the hotels across the U.S., who was telling me he's involved with, I don't know what organization he's a member of. Already, they've shifted gears. I mean, like this was back in April I was talking to him. Building the hotel of the future, a contactless, registration online. You don't have to touch or do anything to get to your hotel room. You're going to unlock it with your phone. So guess what? Human beings adapt.
Right.
We're adapting. We like to be together. We're still going to be together in different ways. To answer your question, those real estate components that have those design elements will be in demand.
Mm-hmm. And then you've got all the ones that don't.
And that's, as I've said many times, the beauty of these people called architects, which I am not. I appreciate what they do. I cannot do what they do. But buildings are going to be redesigned. Look, in 1992, you probably recall, I remember it vividly, my father was up in arms, furious, stomping his feet. This little law called the America with Disabilities Act was passed. And he said it's going to put everybody out of business. It's going to crush us. We have to redesign every building. Look at all the square footage you waste now in a bathroom and blah, 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 blah. 28 years later, you wouldn't dream of building a building without it. Mm-hmm. It's fully accepted by our population. It's frankly was the right thing to do at just about every level as far as I can tell. Mm-hmm. Well, 28 years from today, all these design elements, people are like, well, yeah, there was this thing called coronavirus in 2020, and that's why they built that building that way. Because everybody's now going, what's next? Mm-hmm. Right? Did you see 60 Minutes like 2-3 months ago? They re-aired a broadcast of a guy in like 1986, or I don't know when he was on. And he was describing a pandemic. He was describing a worldwide virus. And I will confess to you that had I watched that in 1996 or 86 or whatever the heck it was, I would have snuffed it off as a near impossibility. Mm-hmm. But people are now going, okay.
What's next?
What's next? Mm-hmm. We did this. And by the way, I'm an optimist, Chuck, as you know. Tremendous optimist. Tremendous. This ain't going away anytime soon. Yeah. We got this for I don't know how long. Yeah. But it's not going to go away tomorrow.
And another function of the fact that we're social creatures, we love to be with each other. Therefore, we are perfect hosts for a virus.
Yes. Well, again, you talk about adaptation. Mm-hmm. So my oldest daughter is a sophomore at Virginia Tech. Mm-hmm. Her mother and I wrestled with what we wanted her to do. We said we would support her decision, mm-hmm. whatever that was. We both kind of wanted her to go back on campus, touch and feel it, see what it was like. Maybe it wasn't the end of the world. She's like, look, I want nothing to do with it. It sounds like a disaster. I don't want to go. Mm-hmm. She's taken 5 classes online. Mm-hmm. She managed to convince us to stay in our house on Cape Cod to do that. So she's really having a really, really tough time, but she's doing fine. She's doing 5 online classes, college level courses. My youngest daughter is doing all virtual high school, mm-hmm. senior year. My son graduated from college, so he's done, but he got impacted by it last spring. We adapt.
Yeah. It brings up another question, and that is, let me just preface this. We visited 2 of our grandchildren that are now adults. It doesn't seem possible, but they're adults. And one of them's in college, She's at the college. She like works like stone's throw from the college, but she doesn't go to school in the college. She takes all her classes online.
Right.
So it is a whole different world of adaptation, and it's to some extent going to be individually driven. Where we're going, but then there does seem to be a tendency to something here. We'll see what it really is as we go through this, and to get to the other side. But let's talk about. You brought up a great point about architects, because architects and engineers, heating.
I'll lump engineers into that.
Right. So there's going to be a lot of buildings that need to be adapted to whatever the future is going to hold. And medical, especially probably medical. I heard, and then I look at hotels, I heard somebody say recently, and as you know, we've done a number of hotel projects. One big one with Mr. Barker a decade ago or so. And one of the things that I heard somebody say is that knew what they were talking about was they said, we may go back to the old style, drive up, park your car, walk to the door and open the outside door of your hotel room, simply because of the issues that people are dealing with. So we have the question I got for you is, this is a question that's a big, big question. I didn't prep you for this at all, because I never thought about this, is that what's going to happen to those buildings that, number one, can't be retrofitted easily, or it's going to take a lot of money to get retrofitted against building new?
Their prices will drop to a level that somebody can afford to buy them and renovate them.
Oh, that's very clear. Now that you say that, it's very clear, right?
Don't mean to be a wise guy, but yeah, there will be, or they will be reused in such a manner that, it needs minor renovations. Remember years and years ago, I think you were at the meeting with me, and I think it was South Lake, Texas, right outside of Dallas. Mm-hmm. The building we were in, and it felt odd, I have to say, as much as I have a tremendous respect, and architects are cool people, what they do. But this architect, whoever did this rebuild, didn't totally convince me. And sure enough, about like day 2 of the meeting, somebody said, well, this used to be an office building. It was an office building converted into a hotel. And it felt not quite like a hotel. It felt a little odd. Mm-hmm. Okay, but that's what's going to happen. Mm-hmm. People are going to take older buildings, and where whatever the use may have been, where you packed 50 people in there, and that's not going to work. We can't change the HVAC, or we can't do this, or we can't do that. We can't create outside openings. Okay, we're doing something else at some, generally speaking, huge expense.
And we're creative people. People are creative, and when it comes to figuring out what to do with something they've got, they can't do what they were doing in the past. They got to come up with a new idea.
Yep. Look, getting back to my optimistic streak, there's always opportunities in anything. There just is. That's what, America is. So we will create opportunities out of this. And by the way, the federal government will come along, right, wrong, good, bad, or indifferent, and say, geez, if you have this building with these type of constraints, we're going to loan you money for 2% for 40 years and take some of the sting out of redeveloping this thing. I mean, there will be paths forward when demand and use show up. Yeah.
So there's always going to be a path forward. So I want to end the call.
In
a minute.
I'm just warming up.
I got you. You have to come back. You have to come back to our next summit and talk about what's happened since then. But if you were going to leave investors with, just talk about investors first, with some advice as to how to navigate themselves, their thinking, their actions, and their investing in the years ahead. How are they going to navigate starting right now to build their retirement nest egg or build their investment portfolio from the standpoint of there's uncertainty in the marketplace. There always has been, but we always thought we were certain that there was certainty, but now we're clear that there's no certainty. So there's uncertainty. What would you advise investors of whatever type to the kind of things to think from and do in the years ahead? Big question.
So from the gut, number one, stay calm. Don't overreact. I mean, I'm going to sound, every time there's a stock market crisis, like every single time they get the Wall Street guy on in front of the camera and they say, what should you do? And he says, don't sell anything. You know what? That's pretty good advice.
Mm-hmm.
My financial advisor told me in March, she actually told my sister, she had a bunch of money, blah, blah, blah. I said, buy 25% back now, 25% in a month, etc. Was obviously phenomenal advice. So stay calm, don't panic. Number two, channeling future revenues to guys like Chuck Sutherland and myself. Go consult an expert. Go sit down, define your goals, your wants, your needs, your demands. Listen, I love real estate. It's the coolest asset there is. And, real estate can all of a sudden flip and take the form of you holding a mortgage.
Mm-hmm.
And maybe you holding a mortgage is a better place for you to be than owning this thing. Maybe you own one of those buildings that needs to be significantly retrofitted, and instead of sitting there forever and a day while it's dark and vacant, waiting for the market to come to you, seek competent commercial advisement. In the brokerage world, yes, I'm feathering my own nest and Chuck's own nest, but we not all of us, but a lot of us kind of know what we're doing and could probably advise you very, very well.
Mm-hmm.
Joint venture a piece of real estate, like I said, hold a mortgage, sell it. Recognize that for whatever reason you've ended up in a depressed piece of real estate, but there's a way forward. Fine. Discount the value, get 50% of the upside with some developer. But stay calm and think these thoughts through. And by the way, you need three legs of this team. You need a commercial real estate advisor, myself or Mr. Sutherland or our peers, your accountant, and your attorney. They're all equal. Nobody's above the rest. Form a three-legged stool to figure out what your game plan is going forward. I know I didn't answer your question specifically.
Mm-hmm.
And I'll try to do that. I guess, everybody has their own individual thing in cooking or life or running a road race or whatever they do. Mm-hmm. So my particular thing in commercial real estate, which I joke all the time to my clients, is cash flow. That's what I want. All day long, any day of the week, that's what I want. And that has been sound advice I've given to a number of my clients. And I will give up return for cash flow, for stability, for non-dark assets. As much as I love real estate, and I teach a 2-day real estate course, and my opening line every time I teach it is, but for illiquidity and management thereof, it's the best asset in the world. But it's not liquid and it's a bear to manage.
Yeah.
So wrestle those two variables to be minimal and work yourself through it. But it's a great asset. It's, by the way, it's going to continue to be a great asset. I mean, look, you get back to interest rates, not really interested. Get back to the stock market, still dicey, still volatile in my opinion, though others know different things, and that's not my form of expertise. I'm still very bullish on real estate.
Yeah.
I have to be. I'm in it, but I am.
Over the long term, real estate has outperformed almost any other asset.
Yeah. And by the way, one more bit of advice. You said give some advice. Stay nimble. Keep some cash at hand. Take a 15-year mortgage, not a 20. Equity is your friend. Don't be a fool. Don't be watching some guy at 2 a.m. with palm trees waving in the background, telling you to buy this with no money down and get a 35%, interest-only mortgage. Probably not a good idea. Mm-hmm. Stay nimble. Little things, Chuck, that you see all the time. People have $1 million piece of real estate with a $500,000 mortgage. Good place to be. Could you go back to your lender and get a $200,000 line of credit on it just in case you needed it? Do it now. Have that in your hip pocket. That's called nimble. Mm-hmm. Have that in your, the roof just collapsed. This happened, that happened. You've got an ability to react quickly without having to wait for a lender to come to the table and beg and get an appraisal and do this. You're proactive. You're prepared. That's what I always try and do.
So stay nimble, be prepared.
Stay calm.
Stay calm. Stay optimistic over the long term.
Yeah.
And don't do anything stupid.
Yeah.
Which is easier said than done, frankly.
Well, we've, listen, I've done my stupid moves, let me tell you.
Yeah, me too. Me too. Mm-hmm. All right. Joe, thank you for being with us on today's this episode of the Real Estate Expert Summit. And coming right up should be another session for you with another one of our great, fabulous guests. So we'll look to see you back. I could say on this channel soon. All right.
All right, bud.
Thank you, Joe, for being with us. Very much appreciated. And thank you for your wise words of wisdom, even though you have to couch them with, I don't know, but we really appreciate your sharing that with us.
Thanks. I was honored. I appreciate it very, very much.
All right. Well, thank you very much.
Okay. See you later on.
All right. Bye.